Home sales. So it's an announcement that traders pay a lot of attention to, but they pay attention to it somewhat selectively. And why is that? Well, there's a couple of tips here. Home sales is a measure that is reported frequently for different economies, but it plays a different role and a different emphasis depending on the economy that you're working with. I would argue that the numbers would show that home ownership is a bigger deal or a bigger factor for U.S. consumers than pretty much anywhere else. Although it is a very important factor in places like Australia, Canada, the UK, the European Union to a lesser extent. So it does have some importance across the economies, but it's particularly important with the U.S. Now, it's somewhat problematic for a couple of reasons. So let's look at the first one, of course, is that it's subject to a lot of conflict. One of the things that I would point to is that right now home sales, home prices are getting a lot of press right now. The numbers never match. Try to take one article to the next and match the numbers. They just won't meet. Well, why is that? Well, it's everything from which report are you looking at? So, for example, if you're looking at the report from the National Association of Realtors, which has been around for a lot longer than some of the newer reports, like the Case-Shiller Index, for example, it will show something that's different because they're using different data. So they're getting different data, that they're analyzing that data differently, they're breaking it out differently, versus, for example, there's a couple of new indexes that the S&P has called the Case-Shiller Index. For those of you who know who Robert Shiller is, he's a very popular economist that is lately been showing much more bearish numbers than the National Association of Realtors has. But traditionally, most economists, traders, etc., are paying more attention to the Realtor report and less attention to some of these newer reports, including the Case-Shiller. The Realtor report is the one that's due this week. Now, it's also problematic from another perspective. Second tier announcements. So that's the problem is that there are different levels of economic news. So when you break it right down to the core facts of what moves exchange rates, it really boils down to just three things. These are the first tier announcements. So they are trade, capital flows, which would be things like you'll get that kind of information from tick data, etc. Interest rates will play quite a bit in here. Now, and finally, number three are cross-border transactions, things like acquisitions, major acquisitions of property, plant, and equipment, even companies, etc. But it's much, much smaller. So really the two that are driving are these two. Everything else that falls into this second tier of announcements, which includes home sales, kind of traders are trying to figure out what kind of an impact is it going to have on trade or capital flows. So in the case of home sales, one of the things we're trying to figure out is, well, what's going on with the consumer? Is the retail consumer going to keep buying things? Is the economy expanding? Or are we beginning to see some constraints? So the report itself is chopped into two segments. The first one is sales numbers. And this is the one that you'll see forecasted quite a bit. So when you're looking at your economic calendar online, typically what you're going to see is you'll see, well, what was the last report? Let's say the last report was 5 million units and forecasted to come out at 4.93 million units this time around. But this number is actually, in my opinion, secondary to the most important piece of information during times of economic strife. So if you've got economic contraction going on, which we do in the US right now, then we're much more concerned with prices. And why is that? Because prices, home prices, equates to savings in the US. So US consumers treat their home as their savings account. It's probably self-destructive, but it's the fact of the matter. So if home prices are declining, that means that basically their savings account is declining. That means their access to capital is becoming a lot more constrained. What are they going to do? They're not going to spend money on things like big ticket items. They're not going to import as much to be purchased by a retail consumer. And ultimately, that is probably going to hurt the currency value, the dollar's value. Now, interestingly, if we look back over the past several reports, if we look back over about a year, we can really see what matters in this particular report. Trend is actually not as important as change in the trend. So we're really looking for something that may surprise investors. So here's a good example. By the time we got March's data, so that would be April, it lags by a month, we could see a big tick up in prices. So what does that mean? Well, that's good things for the U.S. consumer, and which in turn can be inferred to mean good things for the U.S. dollar. So as you can see, let's look at a chart of the euro. That report came out just about where that arrow is, and as you can see, the decline of the dollar more or less paused against the euro right there at that level. Now that's because this was a major shift. The prices had been declining for some time. In fact, we can back up to the last time. So here's a graph of this is home prices as well as home sales on the left-hand axis. So on the right-hand axis is home prices, and you can see here that little tick up that we were just referring to. Well, you can also see the change in the trend after a minor correction earlier last year. So by the time we had that data, which was in September, we would expect to see the dollar begin to really weaken against the major currencies, including the euro, where home prices are not as big of a deal as they are in the U.S. It's really one of the major culprits to the current economic slowdown in the U.S. right now is home prices. So it's something that we're paying a lot of attention to. It's also something that as time goes on and as the market starts to resolve itself and to resolve some of these issues, it will probably decline in emphasis. But right now, we're watching it very carefully just by nature of indexing the amount of buzz and news that's out there. It's going to drive the market, and what we're looking for is change. So for example, if we were analyzing this report right now, we have a channeling euro-US dollar. We have improving home prices. This is good for the dollar and is likely one of the reasons why the dollar has been so defensive against the euro. If we get a surprise and a change, which is what we're looking for, so if we get a change to the downside in home prices, that really could contribute in a major way to another decline in the dollar, and that's where we'd start looking for this breakout from the consolidation pattern in the euro. However, if we don't get that big surprise, then we're probably still stuck in this holding pattern until we get something else from a fundamental perspective that's going to really kick the balance out from underneath the euro dollar itself. So this is one of those potential factors that could shift the balance of power here, if you will, and which is one of the reasons why traders are paying so much attention to it right now as we start to forecast what's coming up in the near future.